Hey everyone, happy Friday. Jason Jacoby and Mark Boyer here with the closing bell for the week. It's been a few weeks since we've had an actual regular closing bell.
Really? Goes quick, huh?
It
Time is
does.
flying. The summer, it's amazing how, like, we're past July 4th, like, a ways past already. It's weird.
Soon it's gonna be Christmas time and I'll be really happy.
The weather's
Uh,
nice. It's all good. Summer's great. Love it, but
yep,
it's going quickly. How about you
absolutely.
and I wearing TM shirts, both of us?
This ad is brought to you by Travis Matthew for this week's edition of the closing bell.
We don't recommend a stock, though.
Yeah.
Uh,
But in all seriousness, we're happy that you're here with us this week. We've got a few things we want to cover. First big kind of newsworthy topic this week was Amazon's Prime Day. It was basically 2 days of
yeah.
discount shopping on Prime, on Amazon Prime platform. Their subscriptions have actually tapered off, so analysts were kind of looking at, oh, I wonder how they'll do this year. It'll kind of be a bellwether to see how consumers are spending. Maybe they're looking for discounts comparative to just shopping regularly. Well, it turned out that they did over $12.7 billion over the 2 days across all their online
Wow.
platforms worldwide. Shattered estimates in terms of previous years, year over year growth
Yeah.
of 6.1%. So, could this be an indication that the
Well, I
consumer is still
mean,
spending?
you get a lot of discounts, right? So you're getting
Yeah.
discounts. People are trying to they're trying to find deals. So
Yep.
it's an opportunity for them to do that. And so yeah, it's great. I mean, I think it shows that consumers are still at least fairly strong. We
Yeah.
know in spending. And
Yeah.
you know, I'm not a big Amazon guy, but it is what it is. And I think it's a way for us to kind of gauge where the consumers are. So yeah, it's good. It's a good number, especially again, it continues to be a show that the consumer is a strong, still spending money.
Yeah.
So
Absolutely.
we'll have to find out if they're borrowing it. Right now, the borrowing costs have not been increasing, but we'll get those numbers later about if it's all on credit cards or not.
Yeah.
So we'll see.
Absolutely. That's a good
Yeah,
point.
yeah,
Next thing we want to talk about, which is the main topic for the week, inflation, inflation, inflation. We talk about it every month for the last over a year now. So this past month's inflation numbers, CPI numbers, actually surprised at the downside by it was decreased 100 basis points from the previous month,
hmm.
which is huge. So headline CPI, which includes food and energy, which are the most volatile sectors,
Yeah.
3%, excuse me, and then 4.3%, uh, 4.8%, stripping out the volatile food and energy sectors. So a little bit higher for the core, a little bit lower for the overall. So is this the numbers that we're looking for moving forward?
Yeah, well, they're moving down, so that's positive. We know that, and that's the market likes it because we had a rally this week. Those numbers have been positive because it basically it's kind of the focus has been on the Fed and what they're going to do with interest rates as those numbers. That's their fight.
Yeah.
So, again, it's still, we've talked about this before, it's still working through the system. They started this process quite a while back, and it takes time for a lot of that to work through. So, but it is heading in the right direction. So that's a very positive sign. And then I think hopefully it determines what they do next. The markets are expecting a couple 25 basis point increases here in the next 2-3 months, which, oh my. The market's expecting that. I mean, I think it would be a really good news to the market if they
Yeah.
paused again.
True.
Which it's just got to make like, why do you want to push it? You have a history of always overdoing it anyway. So,
That's very true.
why don't you try to break that trend once in a
Yeah.
while and get a win? But anyway, we'll see. But that's kind of where they're headed.
Would there be any downside to waiting? Like we want them to just pause and wait, and just let everything bake in the last 6 months or so that we haven't even seen yet, baked into the economy fully. Is there any downside to that at this point? Are they just trying to avoid like the 70s again, where inflation rears its
Yeah,
head?
yeah. The downside is, if you don't keep a lid on it, that it gets out of control and it starts to go nuts. But again, these numbers, I mean, I think that, so that's the downside. And I think that's what you're talking about, going back to the 70s, 80s of some mistakes of stopping sooner. So they've got that in the back of their head. But yeah, I don't think so. Again, we're dealing with, in my opinion, a lot of times, we were dealing with supply issues, through COVID, a lot of these things that really pumped inflation very high,
Yep.
and some of those things have worked their way through, and now so it's a tough one. I would love to see them pause,
Yeah.
but I don't think they will.
And what's interesting, going back to kind of core CPI, and then like the super core, which removes kind of the housing, which makes up a third of the core kind of number. If you look at removing the rental values, what people are paying for rent, and also a lot of people don't know that this includes all homeowners. So what they do is they take the homeowners, people that are paying mortgages, and they have a rental imputed value. So if the homeowners were renters, here's what they would be paying. And so it's kind of like a number that doesn't make sense because they're not paying those numbers, but yet we're calculating that. So if you look at that and you strip the housing sector out, which we obviously know rents have been a lot higher as of recent, just with inventory and less multifamily dwellings, which are being built now, which should hopefully ease that up. But you strip out the housing, we're actually below 2% in terms of core CPI numbers, which is very interesting. So going back to your point, is like, well, we'd love to see take a wait and see approach,
Yeah.
but
Yeah.
it looks like the Fed will most likely raise rates again because we have the strong jobs market. People are still spending money, which could spell again down the road. We don't know. We're not going to play the game of, hey, here's what's happening. We'll have to be data dependent at this point and see, is it continue to slow down? Do we have a
I
soft
don't know.
landing?
Yeah,
Like,
it's a tough one. You're too young for this, but back in the day when I was younger, we had ankle weights. Did you ever use ankle weights?
Yeah.
Oh, you did? Okay.
Can you
So
jump higher? Like
they
those
help you.
weights?
Yeah, they put the weights on it,
Yeah.
and I think that's what the Fed's thinking. They just want to keep a weight on this whole time until they're sure that the economy is going to spring back in a in a way that's significant but not over crazy. So I feel like we're wearing ankle weights for a while here,
Yeah.
and that's what they're trying to
It's a good
do,
analogy.
is keep that on kind of on the market. So the more that we see they can let those off, I think the freer the market will feel like it can move forward. So again, the recession. This is the most anticipated recession of all time. I know in my lifetime.
Yep.
So a lot of companies, a lot of people, consumers have already forecast. I mean, I'm talking to clients all the time. We're all, like, when's that recession coming? And everybody's sort of already tightened the belt. So, I mean, again, that's why I think it's a lot of it's been baked in, but we'll see how this plays out. And again, I don't trust the Fed, honestly. I mean, because they have and I don't mean, I mean historically they have a tendency to overdo it. So I wish that they would just kind of slow the pace.
Yeah.
Don't have to take the ankle weights completely off, but just don't keep putting more weight on them.
Exactly. And then kind of the sister report for the CPI is the PPI, producer side of things, people making the goods, the services, things like that. PPI actually came in lower as well for, I think it's the 8th consecutive month. So we actually have 2.6% year over year PPI for the core number, which is really great. So maybe that's also a foreshadow of lowering consumer pricing as well, and inflationary pressures on the back end, hopefully.
Yeah. Again, hopefully they haven't overdone it already, but we'll see. The banking, the banking issues, JP Morgan coming out, we're talking about earnings today, they're hitting it. It wasn't a surprise for us because, they're gobbling up all the little banks, and which is another subject. Yeah, I mean, too many big banks. We need the regionals. I'm rooting for the little guys, the small banks, the regionals. We gotta support those people because that's where all the
lifeblood, right?
Yeah, it's the lifeblood of this country, really.
Commercial real estate,
so,
a lot of loans going through the regional
but
banks.
there's a push to the big banks. So anyway, we've talked about that before as well. But if you've got a local bank or recommend credit unions or whatever locally, support them.
Yeah. Absolutely. And that was the last thing we want to talk about. Again, earnings season kicking off. JP Morgan smashed earnings expectations. No surprise there. But we'll kind of bring you more up-to-date earnings as they roll out over the next few months here. And I think that's all we have for the closing bell. But thanks so much for joining us, and we'll see you next week.
God bless you.